Today's market call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. With Fidelity Trader Plus, you can customize your preferred tools and charts and tap into crucial data across all your devices. So I can save an order on my desktop at home, get a mobile alert here at the studio, and complete the trade in the Fidelity app without starting over. Try it for yourself at fidelity.com/Trader Plus. Monday, January 5th, 2026. The year is flying by. That's Dan Nathan. I'm Swizz, soon to be joined by the great Carter Braxton Worth. For you futures fans out there, January, Dan, is letter F, as in first. I don't know.
Do you is this just by memory, like all the letters?
Well, I did it. I was yes. And if we want to run through it, we can at any time you want. But my memory is even at my advanced age, doing okay. I'm looking at. I'm seeing if I have those Prevagen.
Oh, stop it! Hey, by the way, so you said the year's flying by fast. I mean, we've had a bang up 3 years. I mean, we've had a heck of a bull market, right, for the last 3 years or so, and we're up nearly 1%, guy. On the year, let's just annualize that. I think this could be 1999.
Wow.
I hate.
Is that what you're doing there? Is that what you're doing?
I don't really enjoy these, these comparisons to 95 or it's like 97. We're hitting this 98 period, and 99, the NASDAQ was up 8, which is pretty shocking. The NASDAQ was up 80% in 1999. I just don't think they're that useful, but it is what it is. There's a lot of excitement about a whole host of things. I was asking before we turned on, why are the bank stocks up like this? JP Morgan's up 3%. It's up 4.5% on the year so far. Your Citibank is up 4% today, up 6% on the year. Goldman Sachs, guy, up 9%. Morgan Stanley up 6%. I mean, so I guess one of the things being priced in right here is a bang up IPO sort of calendar that's likely to evolve if we do, if we are in the throes of another like crazy bull market here.
Yeah, I think that's fair. I can't speak to exactly what the banks or people are looking at in terms of the banks today, but it's just, to be honest with you, it's seemingly a continuation of what we saw over the last, basically 5 months of last year. So maybe it's just as we get into the new year, new money being put to work. I can't answer that intelligently, as is my, typical thing. I can't answer a lot of things intelligently. But let me just say this before we bring in Carter Worth. And this could be a fun exercise, and we'll talk to Carter about it. The all-time high in the S&P was 69.45, and that was made, I think, a couple of weeks ago, if I'm not mistaken. It doesn't really matter, but the point is, it was made in 2025. It appears as though it's almost a foregone conclusion that at some point early this year, we're going to take out that prior all-time high. So the question then is, what happens the rest of the year? Do we have some weird reversal off an all-time high? Do we make a new high and then sort of pivot back? That to me is going to be a fascinating thing to watch, understanding that the low in April was, I think, like 48.50 or something like that.
Yeah. So in a report over the weekend, I think he had some data about the average, medium, decline in the S&P 500 over a long period of time. One thing I thought was really interesting, guys. So the head strategist over at Apollo that we quote kind of often, Torsten Slok, he has this daily spark. And I think it's interesting, my sense, guy, over the last year or so. By the way, we're going to hit oil. We're going to hit, some thoughts on what's going on in Venezuela.
Any questions, if you got them, fire away in the new year, all those
throw those in there. So we're going to look at oil stocks, drillers, large integrateds, crude. Obviously, Carter's going to help us with some of that. And then we got to talk about semis versus software. It's been crazy. He had a great note out on that. But really quickly, guys, so my sense is anecdotally, and I don't read him daily, but I do read reports. I do read some stuff that people are reporting on his research. I feel like he's been negative and on the economy, maybe not so much the markets or vice versa, but you get my point. So the Daily Spark are these like quick little notes with with the chart. Let's go back a week because I think this is kind of interesting. So this is December 30th. Wages have grown faster than consumer prices. Okay. We move forward here. Credit metrics continue to improve. Okay. So if she wants to kind of not leave me hanging here. There
That's
we go.
Amanda, by the way. She is doing great.
Well, she's doing fine because that wasn't great. Let's see if what comes next is great. So credit metrics continue to improve, Guy. Let's go up to January 1st. U.S. economy enters 2026 in great shape. Okay, so you see all these charts. I'm just kind of glossing over them. Let's go up to January 3rd. Strong retail demand for gold. I'm not certain that kind of flies with like all what we're talking about as far as the enthusiasm about the economy and the markets. 40% of U.S. homes don't have a mortgage. I mean, to me, that's interesting for a couple reasons, and maybe you can kind of opine on that. But this is kind of the one that comes out today. Credit growth accelerating in the U.S. and Europe. So you put that together as a bit of a mosaic.
Yeah.
And say to yourself, pretty much those are tailwinds for the economy.
Agree with that. So go that last slide to 40%. This is a staggering number. I knew historically it sort of trends in the high 20s, but 40% of U.S. homes don't have a mortgage. That's up from 33% in the prior year. And you can see, actually, it's been more than the high 20s for a while. What does that suggest? Well, again, that on top of the wage growth slide that you put up, to me, how is it skewed? It's skewed to the higher end consumer, right? I mean, if you think about it, that 40% is not going to be the lower and the middle class. And quite frankly, the wage growth that Torsten is talking about is probably skewed towards the upper end, which, I don't have the data in front of me, so I don't want to guess. But when I see that mortgage number, that sort of galvanizes my ideas. And I'll continue to say that the lower and the middle end are getting squeezed. And I don't know exactly what that means, but I do think it's going to continue to manifest itself in an unemployment rate. Now, could all that be okay for the market? I guess if it continues to be dragged up by the top whatever percent of the economy. But at some point, this all comes home to roost, I believe.
Yeah, I guess the administration is trying to make the case that the tax cuts are going to benefit a lower earning consumer. That remains to be seen. The wage growth thing is great, especially if you have moderating inflation, right? But what's been clear is that a higher earning consumer has been able to weather higher prices, far better, right? And that's where you get that sort of K-shaped. I mean, I think a big story might be this whole productivity boom and what AI means for hiring. We highlighted last week, I think, on one of the podcasts that there was a journal in the Wall Street, there was an article in the Wall Street Journal that said, CEOs are planning for 2026. One of the things they're not planning on is hiring. Remember, that was the headline. So, we'll see. But as long as the spend on data centers continues this way, it's kind of hard to look at what's going on in the markets and say, they're not keying off of that CapEx spend, right? And so what I also think is interesting, if I'm just looking at, this Mag 7, I'm not certain that's going to be so useful anymore just to look at the performance there. Now, if they don't perform, and many of them underperformed the S&P and the NASDAQ last year, might that put a cap on some of the gains? My view last week was that I'd rather be involved in the equal weight S&P than the market cap weight S&P this year. If you have a short-term time horizon, if you have a longer-term time horizon, have a ball. I mean, this is what you should be doing, as always, right? Dollar cost averaging in the S&P 500. And to be frank, if you were just in the equal weight for the last 3 years, you've lagged in performance dramatically.
Considerably, yeah. And I think you might be right. This is the year, and you've said that a couple times over the last month or so, that equal weight might be the play in 26. And if you look at it today, I mean, maybe it's starting to, well, I mean, again, one day does not a trend make, but you may be onto something without question. The other thing that I just want to mention before we bring in Carter, and I don't want to make a huge deal out of it because it's still below 15, but on a day where the market is ripping and all sort of risk assets seemingly are doing well, you have a VIX that's actually modestly higher on the day, understanding that it's still sub 15. And maybe that's something to do with, we're now out of the holiday shortened weeks and that type of thing. But that's going to be something I think is worth watching too.
Guy, what is your take? You wake up Saturday morning, you see the news about Venezuela. There was just my quick take, like not maybe having to do with the markets a little bit is like, if this is something that alters maybe the perception of the Republicans holding the House and the Senate. Do you know what I'm saying? Like, this is something that this administration, or at least Trump, campaigned on, that we weren't going to get involved in these sorts of foreign entanglements. And so, to me, I'm not certain, even under the best case scenarios, which would be like today where we are. Look, fast forward 9-10 months, into the midterms. Let's just say everything is right here. It's static, like you like to say. I'm not sure that's a positive. I see more potential negatives than positives, and those are the sorts of things. Any negatives is where you get both sides maybe piling on, and any real positives for political reasons, you'll probably have the Dems, continue to be aggressively against it, but the Republicans will come around and they'll basically rally around. Does that make some sense?
Well, but again, you looking at it through the political lens of what happens in the midterms, and I get that, and I looked at it and like, what are the reasons behind it? And as much as people want to say it's about energy, and I think that is a big part of it, to me, it's about some of the rare earths and some of the other minerals. Venezuela is a mineral-rich country, a country that China's been making some significant inroads in. So again, I don't know necessarily all the reasons why, but I look at this and say, okay, it's our attempt to sort of stem the tide there on an energy front, but also on a resource front as well. And I think to a certain extent that's playing out. But then the next thing, and you probably heard it from dozens of people over the last 48 hours, is, does it embolden China to do something with Taiwan? What does it say to some autocrats in the world if it gives them the green light to do things in their regions? What does it mean for Russia and Eastern Europe and those types of things? And those are the things that I think are market alarming, but clearly not today.
Yeah, and I think your point is a good one. I mean, geopolitics and trading off of them don't tend to be great signals one way or another. And the only reason I was bringing up the politics of it, Guy, is just kind of what might it mean for the markets in the back half of the year if we start seeing like some polling that suggests, I don't know, the Dems take the House and maybe the Senate. That's my only point, because then you curb probably the potential for this sort of activity as it relates to foreign policy, and then potentially some domestic policy. And then when you're on the other side of the midterms, you also start pricing in a lame duck, right? For a second term sort of thing. So again, there's no reason to trade off of any of that. I just thought from a sentiment standpoint, that was some of the things that piqued my interest. Guy, it's the first market call of the new year, and we have Carter.
Bring him in.
Of Worth. There he is. Carter.
How are you?
And a freshly shaved Carter Worth.
Yeah, I got your thing about the blue shirt, guys. So, but
you wear it much better than I.
I don't know. You might have yours up a little tighter or something going there.
You're going for the Engelbert Humperdinck look. I am not.
So Carter, you heard us just talking a little bit about the idea of trading off of geopolitics or domestic politics, that sort of thing. As a technician, does any of that stuff matter, or does it just have you gravitate towards the way different sectors are trading? I mean, we spend a lot of time, I think, our fundamental people, kind of parsing through some of this stuff. But at the end of the day, you could tell us, what is that game we play every once in a while, Guy, on the fast
If you
money?
told me what was going to happen the 24 hours before, how would you trade it? And I'd say it all the time. I'm a coin flip at best in terms of trying to sort of, game out what would happen with the knowledge ahead of time. And that's just the way the market is.
Yeah. I mean, so if you read some of the original, and that's not original, the people way before him, of course, but Jesse Livermore's sort of early, and he was one of the great traders of all time, went to Boston from, I guess, Acton, Ohio. I don't know where he was from originally, a dirt farmer, his father, but he said as much, right? He just didn't want to scratch the earth, so he left at 14. And the thing that amazed him is that he was like he said he would look at the newspaper. It was all old. Of course it was, because you lived it during the day. The job of a journalist, or anyone who's laying down the history or recounting anything, politics, business, is to put a reason to it. Like, there would be no article in the Wall Street Journal that said, brokers went up today. Wait, I paid for that? Tell me why. But see, the thing is that the person who studies price action doesn't care about the why, right? And I say that, and I've repeated that, and I know it's annoying, but I'm not in the why business. I'm in the what business. And people ask me that in the client. They say, well, why do you? And I said, I don't know. Why? Why do you think? And they say, well, I don't know either. That's why I asked you. I said, good. None of us know. Let's just deal with the price, right? And I think the greatest analogy is just football. Why did they run that play? Who cares? They went left, hiked, and it looks like it's a run. So we could wonder why, or well, let's tackle that guy. So a linebacker never thinks, really. That's his job, is to react, right? And that's important. Not to make fun of linebackers; they're great players on the field of all defense. But it is about reacting to the ball, not really anticipating. And so price action is important. Now, a narrative is a comfort blanket of sorts. You have to have newspapers, I guess. There has to be reasons. And one can say, no, this is absurd, Carter. The energy stocks are up because of, but here's the thing. Oil service stocks have been crushing the energy sector. So Schlumberger, Halliburton, and others, bigger have been on the move for months. They bottomed in July. And in fact, if you look at a broad basket of those, they've been keeping up with the S&P. It's the big integrators that have kept the sector back. So if you looked at an equal weight energy sector versus the actual weight, with, of course, the big heavy weightings in Chevron and Exxon, almost 50%, the OIH and stocks that are related to it, the drilling, have been doing very, very well. And so one could say, well, was that priced in? How can you say that? You mean to imply that the market was so wise it knew that Venezuela would be captured by it? That's not what it's about. It's just about the price. And this, if you didn't know what it was, you'd say, that's a good looking thing there. If you pull that back, it's a textbook bearish to bullish reversal.
Yeah. All right. We're going to dig into these in a second. But, you bring up linebackers, by the way, and Guy Adami, Croton on the Hudson circa, what was that year? 1979. You guys can go to Wikipedia. Guy Adami in the end zone. I can't remember who it was against, but it's in the Wikipedia. Makes a interception in the opposing team's end zone, and he literally brings it back 105.
Those are the funnest plays. Wow.
The longest pick six in Croton on the Hudson history. Go look at it in the Wikipedia, people. It's truly amazing. And Guy, because he was a Georgetown Hoya linebacker circa, early 80s or so. You graduated in 86, so it must have been like 82, 83 or something like that. Guy is going to be featured on a panel with Hoya's investment investor, something like that tonight. I'll snap a couple pictures. I'm going to be there. I'm not a Hoya, but I'll be there, and we'll hear what Guy had to say there. And lastly, before you get out of here, Carter, I just sent somebody a quote from Reminiscences of a Stock Operator, which is basically this semi-biographical thing of Jesse Livermore. If you haven't read this book and you're into the markets, you got to go read the book. I have a quote there. Guys, should we just do, like, your 411? You have been pushing on the XLE. You've said it on numerous occasions. You quote, Louise Yamada. And will you tell Carter about the email that you got from Louise, which is amazing? But you've been saying
she sent a wonderful email last week that I shared with the Fast Money Group that, I mentioned her on the show that night, and she said what a darling I was to continue to bring up her name and how she often watches the show. And she still, I don't know if she does her work as rigorously as she used to, but she's obviously still follows the marketplace. And again, I think Carter would agree. You and Louise you sit atop basically the Mount Rushmore of technicians.
She's a pioneer. Louise and I have met and had lunch in the past and so forth. She's a pioneer. Let's just leave it at that. One of the early practitioners, and in a world where obviously it's changed, but in a world that was almost predominantly male, she really stood tall in the early goings. The greatest.
Yeah, well, Guy, you had been saying on the XLE, and I'm sure you and Carter had discussed it, and I think what the point he just made of the large integrateds doing a lot of the heavy lifting, right?
Yeah.
But, OIH and a lot of those names, they seem to be benefiting from the news in Venezuela right now. Carter, you didn't bring any charts, but, Guy, just give us your take, and Carter's point about the why, you know what I mean? Like, didn't really matter. The price action was the price action.
Well, look, I'm not going to get into whose oil it is and who got ripped off. And, when you're doing business in foreign countries, and Carter speaks to this all the time, you have to understand that, there could be a rug pull at any point in time, and that's the risks associated with doing business in certain countries that might not be particularly friendly. So Exxon chose to take that risk. I think Chevron's still there. Don't quote me. Don't at me, please. Obviously, names like ConocoPhillips. So with that said, it's not for the U.S., in my opinion, to sort of arbitrate who wins and who loses. That's just sort of capitalism. With all that said, I think we can agree that on the margins, this is probably pretty important and pretty favorable to the energy space in general, and probably to the large cap integrated names. And what I find interesting today, and Carter can opine about this, names that have underperformed, and that would be Chevron and to a certain extent ConocoPhillips. Those are the ones sort of getting on their horse a little bit today. Exxon is obviously playing as well, but Exxon is within an earshot of its all-time high, and Chevron and Conoco not so much. So I continue to say that XLE, if we want to pull up a quick chart over the last 5 years, this sort of sideways action we've seen, I think it's going to reconcile itself, and we get a close above 50. And in my opinion, we're off to the races, Carter.
Yeah, I mean, it was the single worst performer. If you look at the precondition, if you pull this back, that captures the drop associated with COVID, right? It was the single worst performing asset of all time, and by sector, by individual stocks, for reasons that are obvious. There wasn't a single car moving, a plane, nothing. And then it was the single best performing theme or area of the market coming off of that low. And then after that sort of drop and recovery, that V down and up, it's been dead flat. And so that's what a prospective breakout candidate is, something that keeps churning and toying with the prospects of breaking out from a range. Ultimately, I think it does. The interesting thing continues to be just how small the sector is, right? At about 3.2% weight in the S&P. Its peak was in 8081 when it, like tech, was about 31%.
Yeah. Carter, are there ways in which you would look to play like individual names? We know that the XLE, for instance, three of the top names make up nearly 50% of the weight. Would you rather play individual names than play this ETF? Because going back to Louise, the longer the base, the higher in space, yet this thing has not really been able to break out. And so, let's pull up Exxon. If they want to just rip through a few of these charts, I'm just curious. Obviously,
yeah, I mean, Exxon and Chevron, again, as we know, is almost half the weight, and Oxy's in there and Conoco. They're not as interesting. Look at Oxy today, down. Look at Oxy. I mean, that's a big name, and down. So it's really about it's really about the beta and the cyclicality associated with drilling versus big integrateds, and so that's why you're seeing the biggest bumps are in the OIH type names.
Yeah, Carter, our guy, you and I, we put on an XLE, a call calendar. We were selling shorter dated, buying longer dated, and really trying to take advantage of some premium here in the near term and looking for a breakout longer term. So we'll update that maybe tomorrow and look at some other ways to play.
Yeah, and real quick, yes, but pull up a Schlumberger chart, Amanda, if you can, and go back to sort of the fall of 2023. And what I think we'll be showing here, excuse me, is a downtrend that has finally been broken. And you can draw that, you can see it. I mean, I'm sure a lot of folks that are with us now, their eyes work the same way our eyes are working. And, that downtrend was broken, and now obviously significantly so as we sort of cascade. Now, where are the levels? Well, I think it's reasonable to think this can I don't know if it's get back to that prior high, but I think we probably run out of gas in the high 40s or low 50s, and then we'll have another conversation. But that 200-day moving average, which has basically been trading either side of for quite some time, Carter, is finally, I think, starting to flatten out, which is a good sign going forward.
Yeah, it's just again, the idea is it could be back to Jesse Livermore, anyone prior to him, trend following, momentum, relative strength. These are the great factors that over time have beaten all others. There are bull and bear phases. It was in a great bull phase coming off of the COVID low. It was in a bear phase, 22 or 25. And this is a transition from bear to bull. It's why that nomenclature, bearish to bullish reversal, which has happily been popularized, but I got that from my teacher and mentor. I dedicated my life to his work. People call them rounding bottoms. That's not very descriptive. Bottom from where? Bearish to bullish reversal depicts the precondition that it was bearish bearish down and down, that starts to reverse. And it's all about the turn. And every indication is this is going higher.
Yeah,
Yeah.
real quick, Dan, I'm sorry. And Amanda, go up a chart from the last like 11, 12 years to the highs that we saw in Schlumberger. I want to say back in the spring of 2014. And if you use that as a topping point, then the next point will be that April high that we just talked about. You can see where I think it's going to. And I just said sort of, excuse me, high 40s, low 50s. I think this chart will illustrate exactly what I'm looking at if you draw that downtrend line from that prior high. So there you go, Dan.
Yeah, that's a 10-year downtrend. This is one I think, Guy, to your point, you just kind of buy on pullbacks. But I also think a day like today is really interesting because, you get this piece of news and you get this reaction, and let's see how it closes. To me, that's really interesting. And then the other one, I'll just say, and let's look at semis, because right out of the gate, it's just been bonkers just to follow through of what we've seen. Jensen Huang is speaking today at CES, and he uses these platforms. He's done it for the last few years, just to kind of make some huge sort of proclamations, and it works in his favor, right? They've made so many investments in so many kind of parts of the ecosystem as it relates to AI. It can really get the entire sector moving, and then related names, right? So if you look at this breakout here, we get it. I know, Carter, sometimes you prefer the SOX, the ETF, the SOXX. It's less dependent on the weight of NVIDIA and Taiwan Semi, which have been monsters. But right out of the gate, it's just like, it's kind of hard to chase. I mean, if you're looking at SanDisk is up now, this is obviously a memory name, up 16% on the year. Micron is up 12% on the year. Some of the kind of storage names, which were late to the party since last year, Western Digital is up 11%. They spun out SanDisk last year. I mean, the list goes on. And AMAT, which is an equipment player, 10%. So, Carter, when you look at just like names that were huge winners last year, and again, I know there's a lot of dispersion, but NVIDIA, is only up about 2% on the year, and Broadcom is down 2%, but you have so many other names which are just raging. And then again, software continues to underperform. The IGV is still flat or down a little bit on the year. So you had a note out on semis versus softwares. Walk us through a little bit about what you are seeing.
Yeah, think about Friday, right? So the first trading day of the year, the bifurcation was remarkable. The For looking at this chart, just on Friday alone, you have a move in the semis up more than 4%, and you have a drop in the IGV software more than 2%, 600 plus basis points of spread between two key areas, and the XLK itself was unch. But if you look at that chart, semis have tracked the sector overall. It's software that is really struggling. And the question is, should one play for convergence? No, I would say that the trouble in software gets worse. And the report today for clients was really singling out some of the worst names that look as though they're headed immediately lower, and then had a master list of information technology sector buys and sells.
And it's interesting, real quick, before we sort of
We
drill
can,
down a
we
little
can
bit.
look at some of the names. I don't know. What
Yeah,
we
well, that's what I was
have
going to say.
here
I
is
mean,
a thing, but we can look at. We can look at the. Here's the. So this is the IGV, and I would characterize that again as a bullish to bearish reversal sell. But let's put some lines on it. The first iteration, that is an important formation that is negative. The next way to draw the lines, it's breaking trend. From that trend line's an important low, right? That's the tariff low. The next way to draw the lines, of course, you call them pennants, wedges, triangles, doesn't matter. It's all fairly negative. And then the final way, at least in the report, something of a bull trap, the breakout that couldn't endure and now coming apart. Something's wrong here, and it's a lot of names. And I would say this is a suspect area of the market. But remember, tech overall, the relative performance peaked on the last day of October. So for the last 8 weeks of the year, all of November and all of December, tech overall, including big names like Apple and Avago, has underperformed the S&P, and it's likely, I think, to continue. I would be underweight tech going into the new year here.
So
Okay.
real quick, so let me just jump in terms of the IGV, and I think there's a reason why, and I'm sure
Can you
Dan
zoom
and Carter probably know, but let me throw this in. the four biggest components of the IGV, and it's about 35% of the ETF. Microsoft is 9%, Palantir is a little over 8%, Oracle is 8%, and Salesforce is just south of 8%. And if you look at all four of those stocks, ex Palantir, I mean, they've all had their difficulties in one way, shape, or form. So the underperformance is due, in my opinion, Dan, to the construct of the ETF.
Yeah, 100%. Carter, walk us through Microsoft really quickly here, because this is one, it just acts so poorly. It's through the 150, which you like to look at. It just feels like it's got no bounce.
Yeah, I mean, this is, again, so again, when you get into the why, and I'm sorry, there's a reason, but maybe spend 90 seconds on this. In meetings, it's an old time technical expression, you know, the stock doesn't act well. And people, what are you personifying the stock? Is it a person? What do you mean? It has ill, and they don't understand it. But then when you say, well, how come, and maybe a baseball nut, you know, big PM running 30 billion large cap growth. I said, well, what about when they pull the pitcher out? I mean, this guy can throw. It's the hockey guy a great NHL player can put the puck anywhere he wants in the net, right? A guy who's throwing the ball, he can put it within 1 inch wherever he wants it every single time. Why in the hell did he throw that pitch? Did he mean to? That the guy hit the triple, all right? And the next batter hit a double. Something's wrong. He doesn't act well. Just get him out. And they're like, oh, I get it. I go, we're not into the why. Is he thinking about his divorce, or he's thinking about he's thinking about his back surgery, he's thinking about the other team? It doesn't matter. He can throw that ball. That's why he's an NHL, an NBA pitch. What do I say? A baseball pitcher. And he did that. And then he did it again. Okay. We don't want to talk about it. We'll talk about it in the dugout or tonight over beers. But right now, get him out. And that's all that this is. It's like, I don't know why. I don't want to know why. But I don't want that guy. Like, would you want this guy you're staring at? This player here, who has their Mr. MSA? Okay, he looks like he should be the one to do my surgery right now. What? Something's wrong with this doctor. Get another one. This is simple stuff.
By the way, Guy, let's just blame the catcher for those two consecutive bad calls.
No, because okay, you can.
Good craftsman never blames his tools.
Well, that's. I was going to say, you know, the catcher can call a pitch. The pitcher can shake him off as well. So anyway, back to
really quickly, because you brought up Jesse Livermore, and if you are into markets and you haven't read the book, it's one of the first books when I entered the markets that anyone tells you, or before I entered the markets, read this, because again, I'm sure Carter and Guy have quoted it's just some great stuff. This book was written over 100 years ago, and if you read it and you took out some of just a couple little nuances, right, about the times that you were in, like, you know, taking the train down to Florida or this or that or whatever, this book would work right now, like all the psychology about markets. And I was with somebody who's not in the markets but is kind of in the media related to him. I asked him if he had ever read the book, because, Guy, I don't know if you remember this, about 10 years ago, I copyrighted the name Ticker District for a website. And so this was the quote. And I love this. Hold on, I got to find it for a second here, about the Ticker District. And it was from the book. And so what was it? Edward Lefevre wrote it about Jesse Livermore. And give me 1 second here, people. I just love this. You'll love this. All right. I didn't know it then, but I was beginning to learn that there's no such thing as being a little in the markets. You're either in or you were out. And the worst thing about it was the tendency it had to make a man a little less inclined to permit himself human feelings in the Ticker District. I freaking love that quote. And back then, is over 100 or about 100 years ago, they used to call Wall Street the Ticker District, which is pretty cool.
Look at you.
I don't know. I just sent that quote to somebody like last week.
The emotions, you're either in or you're out. I mean, it's all true, and we say it all the time. It's very difficult. First of all, it's difficult, full stop. But if you're doing this as a hobby, it's extraordinarily difficult. So to his point, you're either in or you're out.
Yeah, Carter, but the end of that quote, the next line, which I kind of buried the lead, I guess. A man cannot have a soul and be a successful trader. He must be a cold-blooded machine, and that's what you seem to be. You don't care about the why.
But you do see it. I mean, all those interviews with, you know, with the greats, Chuck and Miller, they pick your person. They don't get a rush, interestingly, from big gains. because that's not really what it's about. They are playing the game, and they're
Mhm.
playing it as killers.
Yeah.
You
Guy,
know what's
my
amazing? I
lows.
will tell you real quick,
Yeah.
and some of the real, I don't want to say degenerates, but some of the old timers will tell you that the feeling when the feeling of winning is obviously great, but the feeling of losing sometime is more of a rush, as odd as that might be. And some people are sort of attracted to this for the painful moments, not necessarily the good moments.
Yeah, I always find the painful moments are so much worse than the great
100%.
moment. Like it's just one of those sorts of things. Carter Braxton Worth, thanks for being here on our first market call back in
You bet.
2026,
And
man.
Amanda
All right.
just said, I hate losing more than I like winning. Yes, Amanda. By the way, as we mentioned earlier,
Man is doing
Amanda is doing great. Real quick, before we get into gold and some of the other things,
yeah.
when Dan's trading, Carter, me, whatever, we want real-time data, customized alerts, and powerful tools that can quickly help us act. But most importantly, we need a way to access those insights wherever we are. With the all-new Fidelity Trader Plus platform, you can stay closer to the trade with seamless access to your preferred tools and charts across desktop, web, and mobile. Try the all-new Fidelity Trader Plus, the next generation of advanced trading from Fidelity, Dan.
Yeah, that sort of functionality, especially over like the last few weeks, is really, really helpful, right? Being able to go back and forth between different screens, and have the same sort of access and the same sort of functionality. So we appreciate Active Trader Plus. All right, Guy, you just mentioned gold. One of the things I thought was interesting, and your take about minerals, right? Rare earths in Venezuela. That was one of the things I thought was really interesting, that maybe it's not as much oil as far as the minerals are concerned, but it's rare earths and kind of have less dependence on the Chinese. The thing with China, the permission structure that it creates, the inner as it relates to how they look at Taiwan and their commitment to kind of bring it back into the fold. Obviously, Belt and Road is interesting because they have been financing a lot of, at least through debt, a lot of Venezuela's oil capabilities, and then they have much better refining, right, capabilities. That's the Chinese. So because of the sanctions that we have put on them, they have been using cheap oil, and there's a lot of stuff like that I don't even understand for the most part, but it's definitely pretty interesting. So if the Chinese, in retaliation against some of the actions that we have taken, right, which might limit their access to oil, put restrictions on rare earths, that has the potential to dial up more. So it'll also be really interesting that Xi and Trump are meant to meet in early April in South Korea, and what might this do to that, Guy?
Yeah, no, you bring up all the right things for that question. And as much as it's about a leader that was maybe illegally put in office in terms of the election results, and somebody that obviously bowed to the cartels, I think we all agree on that, and somebody who there was a warrant for his and his wife's arrest in the Southern District of New York, all those things are bad, clearly, but it's just as much about that as it is to energy and resources. And I think that's a huge part of this, and that's the part that I will continue to focus on. And it comes down to, what's going on with these minerals and what's going on with these mining stocks, and why are they trading the way they're trading? And what is the retaliation of China? And does it empower China to do something with Taiwan? I don't know if it's necessarily if, more so when. And does it happen prior to this spring sit down in South Korea? I mean, there's a lot of things they're going to shake out, but the timing of this is not coincidental. So real quick, if we can pull up a gold chart, you can pull up a silver chart. This is sort of, and I think, look, I'm wrong all the frickin' time, but this is one that I think we've done a good job. And here's gold getting back on the horse yet again. And we're going to start to, I think we're going to start to challenge those prior all-time highs. Silver, which had that huge move over the weekend, a week and a half or so ago, 2 weeks or so ago, traded up to, I think, 82 or 83, then traded down to, I want to say 75 or something even a little bit lower than that. Now here we are getting back on the horse yet again. So, look, my view on these things. I think precious metals continue to work. Gold for the reasons I've stated. Silver because a lot of the things we've talked about, and it has become an industrial metal, and more people starting to talk about it.
Yeah, so Guy, let's actually see if Amanda can do that. That's just been 1 week since that move. It was a week ago,
Yeah, week and a
over the
half. Yeah,
weekend.
amazing, right?
So pull up just a 10-day. What would it mean to you from and I guess, the stock market has not had any problems with the
Any of
volatility,
it.
right?
Nope.
And these sorts of things at all. So maybe we're just placed a little too much emphasis. Your point about gold has nothing to do about the stock market. Your
No.
point about gold has been a whole host of different reasons. And silver, though, is the one, yes, from an industrial standpoint, but the mania around it, like now go back to a 1 year and then a 5 year, like this would be the one guy. If we saw this thing raging above 80 on its way to 100, you'd have to think some things have broken and
I
you're
agree
right,
with that.
a little bit. So that's the one that's interesting. And then let's go to Bitcoin for a second, because this one, again, just, from a sentiment standpoint, I do think it's interesting, very heavy into year end. Yeah, move that out a little bit. Make it a 1 year if you don't mind. But that looks like, okay, if you were looking to press that, and I thought there was a really good chance that we'd be testing those prior lows from April, which gets you down to about 74, 75,000. Let's see if it can get above this kind of 95,000 level, which was kind of, that this recent consolidation. And I'm not sure it means anything again, like a broader, just, not too different than gold, except that it might mean risk on, because I'm looking around, Guy. All the crypto stuff is raging today. Somebody, I think it was Goldman Sachs, upgraded Coinbase, but all of those names, those IPOs of last year, they're all ripping. And then, see things like Quantum are ripping. So it just feels like there's a chase for some of the stuff that was, the most volatile last
Yeah, I
year.
agree with that. And look, we're gonna actually talk to Tom Farley tonight at this Georgetown event. And bullish, I think it's up 7% today. I mean, again, but these are all stocks that have had pretty significant downdrafts. But MicroStrategy's real quick. Yes, it's bouncing today, but not nearly as much as you would have thought, given the sell-off. I mean, we're off that 151 low-ish, but you look at that over the context of the last year or so, and that's in a word, feeble. So we'll see how it plays out. I think the calendar has a lot to do with this beginning of the year, new money being put to work. I think today for a lot of people is the first day of the year, regardless of what happened on Friday. We'll see how this week shakes out. But, this is, I think, just allocations making their way into risk assets.
All right, last thing. 10-year yield, Guy. We've been talking about this 4.2
Yep.
level. It was support going back to spring. We broke down in September. It's resistance right now. We've kind of banged, we've basically tried to break out above 4.2%. Are you surprised, given what happened, the macro geopolitical stuff over the weekend, that you're not seeing more volatility? Like,
yeah, I would have thought TLT would have rallied more than it has, sort of some flight to quality on geopolitical risk. It's not happening. But man, real quick before we exit, pull up a TLT chart, do it over the last couple of years, and this is what I'll show you. You're in this sort of pennant formation. So draw the downtrend, the shorter term, and it'll be crystal clear. If you draw the downtrend from the recent high that we saw, I guess it was October of this year, of last year. Now it's last year. So draw that downtrend connected to the high from November. So you can see that downtrend. You can see the uptrend that we're in. So this pennant's going to continue to play itself out. The Ranger's dance should theoretically get smaller and smaller, and then it's going to sort of reconcile itself one way or another. I've been pretty clear where I think it's going. I think it's going lower, which means I think yields are going higher. But if you just sort of want to sit back and watch, this is the pennant formation you have to watch.
Yeah, no doubt. And just again, before long, we're going to get all these bank earnings next week. So
yeah, amazing, right?
It'll be fascinating to see, how much they run into like the report and how they react afterwards, because I think anticipation, like, you just pull up the Goldman again. I mean, that breakout, you know what I mean, over the last couple of months, that's telling you a whole heck of a lot of things there. So they report on the 15th. I think that is next Thursday or so before the market. So most of the big names are going to report next week. So, all right, Guy Adami, I'm sure we're going to have plenty of coverage on that. We appreciate you guys being back here with us on the Market Call. Guy, we are entering our sixth
that's amazing
year of Risk Reversal Media. And our friend Scott Rogers, who's here with us, I think almost every day. I haven't read it. He just put this through at 11:32. But he had a whole background on what we've been doing over the last 5 years, like a few bullets. He went to the Gemini, and we started out, this thing was called the Macro Setup. I think we
Yep.
started in January of 21. Here we are in January of 26.
It's incredible. No,
Yeah.
and it, in some ways it feels 5 lifetimes ago. In some ways it feels like yesterday. But you know, it's amazing. The audience has stayed with us throughout the entire thing. We've obviously grown the audience, but the people from the beginning are still here. And as importantly, the sponsors have stayed with us. And
Yeah.
that to me is really remarkable. Our sponsors are amazing. And, you know, the relationships we have with them at a number of different levels, I don't think we can overstate.
Yeah, no, it's been great. I mean, they help provide us with so many, you know, whether it's data, whether it's insights, whether it's just the support. We couldn't do it without them. We've been able to build a great team on the back of that support. So thanks to everyone. Thanks for the audience. Thanks for the sponsors. We appreciate you being here. You and I are going to be back at 11 a.m. tomorrow.
Yes, sir. Later, folks.
Thanks.